Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Two growth plays top our picks this time around with Shiraz Mian and, look who, Dave Bartosiak in the house. Welcome, paying us a little bit of a surprise visit, or?
Well, the weather's nice, so I figured, why not?
Yeah, but the weather's nice where you're at, too, so the question is why?
Well, every once in a while, you know, they got to reel me back in. I got to prove I'm not just some specter, you know, a ghost
Shadow
of the
on
machine.
the wall.
Yeah, exactly.
Well, good to see you. Shiraz, we're going to start with you. These are both ranked at number 2 by the way. Yours is a growth play. You have a financial and marketing services company.
That's right. Square. Ticker is SQ, about $5+ billion market cap. A very strong growth profile in this. The growing space within technology called financial technology. So perhaps over time, these operators will move to either the finance sector or perhaps the business services. But for now, they are offering a technology solution to a long-standing consumer problem. And Square came in. It's a young company. It's been around since 2009. It's been public for about a year now. They came around to solve the problem for the small and micro retailer who couldn't afford the traditional credit card providers' services. Was too expensive for them, too cumbersome for them. Square solved the problem and has had what they call as the first mover advantage in that under-penetrated market. So about 2 million customers already. They're not profitable yet, but is expected to be in the June quarter be barely in positive territory. Very strong growth profile. The expectation is that on a conservative basis, top line growth should be in the 25 to 35% range annually over the next 5 to 10 years. They are spending a lot of that money in capital investments to set up and build their infrastructure. Beyond that initial service that they offer the small and micro retailer, they have a host of other services that add to the stickiness of their offering for these guys. So very strong growth niche player in a very attractive part of the market, has had a very impressive run-up, the stock. So the more value-oriented folks perhaps maybe a little wary of touching the stock. It's up about 65–66% this year, but has pulled back over the last few days along with the rest of the tech sector. So for those who don't mind living a little bit dangerously, this will be an interesting long-term play.
Well, I read on our site in an article on this company from May, I believe, recent revenues surpassed the Zacks consensus mark and came out ahead of the company's guidance.
Sure, yeah, it has been beating top and bottom line estimates in each of its short public life and has been raising guidance. So the growth has been off the charts. But so has been the stock's performance, and that's what I was referring to as maybe a little bit too rich for some folks. But that's more than offset by its growth potential.
All right, Dave, you have a manufacturing solutions company. It's kind of interesting. Operates in a couple of different spaces.
Yeah, they're a little bit misunderstood because at the surface, when people talk about Brooks Automation, they think it's a semiconductor manufacturing company, and that's it, and they help with that end.
Yep.
And that's been really a part of the run-up that we've had recently has been because of the exposure to the semis, because chips have been red hot leading up until Friday, and we'll talk about that a little bit too. But anyway, so that's a big part of their business, but it's not all of their business. They're also in the life sciences industry there too. And that's where a lot of their growth is going to come over the course of the next couple of years. So they're forecasting that that's going to increase by 138% potentially over the course of the next year and a half, 2 years. So that's good, and that's a big source of growth for them. But you know who made all the money during the gold rush, Terry? The guys who sold the picks and axes.
Yeah.
So when I'm talking about looking at chips in general, and even now if you want to come in and start to place your bets back on these chip stocks while this market has kind of been crumbling a bit, this might be something to consider. So I got a couple of things I want to look at here on the computer. The first of which is the price consensus and EPS surprise chart, which is my sort of oldie but goodie that I always go to, because you can tell a lot just from this one chart here on Zacks. And you can see that over the course of the last several years, they've had this sort of pattern where they overpromise and then they underdeliver. And you saw that in the EPS estimates where they would be much higher early on in the year and then they'd keep coming down. And it was really frustrating for shareholders because the EPS numbers would keep coming down and the growth would kind of just be evaporated each and every time. But they really turned the corner in 2016. The estimates didn't come down. In fact, they went up for the most part, and you had huge growth in between the lines. That's what you can see basically on the chart with the in between lines. Of course, I color them in because I'm, I'm addicted to coloring books. No, but anyway, so you see the big growth here on the price consensus and EPS surprise chart. So this helps to kind of calm your fears a little bit when you're looking at a stock that has run up so much. That's why I love using the price consensus EPS surprise, because you can see why the stock has gone up and you can relax a little bit. Now on the flip side, I've seen stocks where they're running away and you don't get the EPS estimates coming up with them. That's when you have to be a little bit more concerned. But one other thing I do want to touch on, getting into the technical chart here, is even though we've had some carnage, Friday there was a big sell-off, the tech wreck, a lot of people were saying.
Friday, June the 9th you're talking about?
Yeah, Friday, June 9th. And then so far this morning, tech is coming under pressure a little bit, but things could be turning around. But amongst all that, the stock's pulled back to its 50-day moving average here. So the 50 days at 25.49, the stock's at 26.26 right now as we're doing this live on Monday the 12th. So that pullback to the 50-day has happened on multiple occasions. It happened back in April, happened again in late January, also in November. So it has a tendency to do this, and it finds support at that 50-day moving average. So even though it's been very painful the last couple of days, this may be exactly what a long-term investor should be looking for.
Well, that recent string of earnings surprises also helping to support the stock price of the company, right?
Absolutely. You get those earnings surprises, and then analysts come out and they increase their earnings estimates, and it just keeps on, the fire just keeps on going.
So bottom line, still some bullish analyst sentiment out there on this company.
Absolutely. It hasn't had the recent downgrades like we've heard from some of these other large tech companies.
Yeah.
So hopefully, again, this is a great opportunity here on the pullback.
All right. Well, do either of you own these stocks?
I have Square in the focus list portfolio.
I have Brooks Automation in Momentum Trader.
All right, but not outside of
That's
those
right.
two services.
Yep.
All right. Thanks for that, Dave. Good to see you again. As always, don't forget you can find out more information on these two companies and others on our website, Zacks.com. Get over to the homepage, link to it all from there. There's commentary, stock picks, stock picking strategies, among a lot of other information. With Shiraz and Dave, I'm Terry Ruffalo.